Hi traders, I mean, here at Trade the Easy Way, what we are trying to do is to give you the best possible, most thorough analysis that we can in these markets. So I thought, as we are in the final quarter of 2012 and there are a few sort of cyclical pivots coming into play here, I just thought I would show you this chart for the Dow. This is, each bar represents a year's trading. So you can see we are right at this major level, this major wall in the Dow. So here is 207, where we put a big topping tail in, a big reversal bar, and we opened and just fell right down. We closed just narrowly in front of these lows here. Then in 2009, before we recovered, we broke these lows here. Okay, so we came right down to 96, 98 levels of support, and at the moment, we are, if we can't close above this high here this year, in a year of the US president's election and continual tap in the form of quantitative easing that has been turned on by the Fed, if we can't break that high, then I think this market is in serious trouble. So what is the likely analysis? What's the likely story in this? Well, if we close above this, level here, then that is a very, very bullish signal, and we stand. I would imagine that we could possibly even get quite a shallow pullback into next year, and then we could bust up. We close here, in light of what I just said about what's gone into the resources that have gone in to drag this market off of this low here. If we close here, then this market is in a very, very tight corner. Where do we go from here? Because if that level of quantitative easing has only taken us back to 2007 close, then what happens if we hit the buffers again? The ammunition has been fired, and the Sergeant Major can't run off and get more boxes of ammo because there isn't any, or at least the coffers are extremely limited, let's say. We've got practically zero interest rates. So I just want to share that with you. Also, the other question in my mind is, what is one of the best performing Forex charts out there? Well, here's, surprise surprise, one of the worst performing charts. This is the Euro US dollar in the annual chart, and we are right where we opened on the 1st of January 2012. Okay, which I suppose, given the kind of situation that we've had in Europe, that's no mean feat. The ECB are to be congratulated. Now, obviously, we've got a couple of months left of trading, so we need to see where this closes. Again, close slightly above where we are, and that's actually that could be taken as a very bullish hammer-like bar on this kind of level of support. Close below it, because it had a lot of topping tails. We've had there's this sort of rollover pattern. We close below this level here, and this market's in trouble, and the prospects of sustaining these levels into next year are limited, and we could see ourselves coming down to who knows, but I mean, certainly if we break this year's low, then 2002 level of support could be the place we're going to come into. Okay, so I'll be keeping track of this for you and updating you on this. Just to note, if that's the euro, then have a look at the pound. we're just marginally under, just as the Dow is right up against 2007 highs, so we are right up against the close for 2009, the open for 2010, and we're just sitting on the but even right back to 202 levels are here, and even 82 close and 83 open is here. So you can see why Forex has at times been very volatile and a little tough to trade. The easiest charts in my book is this kind of setup here, where you've got a clear reversal bar, and you can just take a break of that low and just sit in it, and just short everything and ride it all the way down, and that's not a bad place to get out with all that support there. So I mean, if we end up closing here, then that doesn't bode that well for next year's Forex, I have to say, because although we will have closed above last year's, that leaves us with the need to clear this area quite quickly, or at some stage during the year, to get any sort of momentum back. If we strip all that away, I mean, where are we? I mean, take all of that away from the chart and just look at a naked chart, and what we're basically looking at is a chart that has had a short signal here, a major drop, a consolidation. So were we to close below this trend line here, this could lead us to the next drop level and take us back to 84 lows. So there is a lot at stake here. We need a good final push in this quarter to get decent closes, otherwise next year is going to be pretty bumpy. And just take a look at the Aussie US dollar. I'm short this Aussie US dollar at the moment. I think the daily chart is very ragged and hitting major highs, and you can see that this is a huge reversal bar up here. Open and close below the previous year's close. So were we to get below 102 at the end of the year, wow, I mean, that doesn't bode well for the Aussie US dollar next year. So this has got a lot to do to I think we are possibly looking at more rate cuts in the Aussie. They've done at least 50 base, no, I think they've done about 75 base point cuts in their base rate so far. So there's a lot of speculation about a possible further cuts. Okay, I mean, if you want to know why Japan is squealing, have a look at this pound yen on the yearly chart. It's hard to believe that the pound yen was up there at 55, and we're currently just struggling with 130. So again, if that pound yen closes above there, I will be all over this pound yen in the early part of the year to try and get to 150. And were we to start closing above 150, then we can possibly do at least a 50%, or at some stage we're likely to get up there. But you can see why the Japanese economy is squealing. They are being squeezed with a very expensive yen. This is potentially a stopping bar here. If I just put, so this is 94 lows. Let me just check when 94, the low was 128.98. So if we close above 129, that's a huge bullish, that's a decent bullish signal for this pound yen, which would encourage me to put a lot of emphasis and some decent position size on this one to see if we can at least get back to 150 next year. So I'll keep your eyes on that. Okay, that's enough of that. Now let's get to the daily analysis and see where we are. Also, if you want to know what's the best performing instrument of all the mainstream forex and commodities, the answer is this one here, and this is soybeans. That's what a change in the Asian diet and the combination of a change in the Asian diet and a drought has on a commodity. That's the best performing chart that I can find of the mainstream charts. Okay, so enough of that, and I'll just switch now to the daily review.